right, everyone. Thank you for jumping on today's webinar. We have a very special webinar with David Schirmer. Thank you, David, for taking the time today because with 2017, we have a lot of uncertainty in the world, and we get questions a lot from loan originators about what's going on, and you're obviously our foremost expert. So wanted to talk to you a little bit about what you expect from a whole host of things that for this year with Trump and China and oil and obviously mortgage rates and the markets and kind of what it all means and how it's going to play out. So thank you for taking the time today. We all appreciate it.
Well, you're welcome, and it's not a problem. I enjoy doing it. We're about to head into a year that we have not seen in many, many, many years in terms of the history of changing presidents. Even the Reagan administration, when he took the office, and there was a huge amount of criticism similar to what Trump went through during the campaign. But this is a whole nother world. You have a businessman who is putting tremendous amounts of business and military people in positions of authority and responsibility. He's not a politician, there's no doubt about that. His promises, wow, I mean, they are, in a way they're not excessive, but in another way they are in the context of what the markets are actually believing he's going to be able to accomplish in the year 2017.
Well, that's actually sort of the first question, and is not sorry to cut you off, but the market clearly thinks that Trump, at least based on some of your writings with RateAlert and what we're seeing in the marketplace with interest rates in the stock market, clearly thinks that he is going to accomplish a whole hell of a lot in 2017 with the promises he made on the campaign trail and since he's been pre-elect president. So
he's been a tweeter.
Yeah, he's always. So what is it that you think that he can get done, or do you think the market has it right in terms of how much he's going to be able to affect the economy in the coming year or two?
Well, if you say a couple of years, I think the market has it right. But in terms of the near term, and let's define that for the moment as the next 6 months or 8 months, I think the market is a little bit over optimistic. One of the things that you have to realize, or the markets don't appear to take it into their thought processes at this point. And when I say the markets, I'm talking mainly about the stock market, the equity markets, not here, but as well as the markets in Europe and some of the other places around the world. Congress and our political system, even though we've got a new dog in the doghouse, so to speak, Congress doesn't move that rapidly. They never have, they never will. I'm concerned not that the markets have it wrong. I just think that what we're going to see in the early part of this year is a tremendous amount of volatility in the market as some of the investors and some of these expectations fall short in terms of the time frame. For example, I read a lot about different analysts and so forth, like everybody in my business does, and the consensus is right now is that we're going to see an increase in the GDP next year from this year, which is going to come into about 1.6% growth, up as high as maybe 3 or 4% GDP growth, and I just don't think that's possible. It's going to take a long time to initiate tax cuts, for example. They're going to come. That's the easy part, but it won't be easy in the context that it just isn't going to happen very rapidly. Well, one thing we have to keep in mind here is that we have only heard since the election uh, Donald Trump's voice, Donald Trump's opinions, Donald Trump's appointees. We have not heard anything from the Democratic Party or a number of the Republicans in the party who were totally against Trump. So these things haven't played out yet.
Right, right. Um, do you think that the market is sort of, well, obviously, part of it's Trump and no doubt, but even before Trump was elected, you really were starting to see some inflation creeping into the marketplace, some growth, not only here but all over the world. Do you think that trajectory could be more of a hockey stick now that we're adding this gasoline on the fire?
Yeah, I definitely think inflation is going to increase. Uh, you can't do some of the things that Mr. Trump wants to do in terms of, for example, the renegotiation of the trade deals that we have around the country and not have it increase the cost of goods and services here in the United States. And uh, you can see that with the dollar. The strength of the dollar makes our imports real cheap. However, our exports are going to suffer a little bit. And when some of these companies decide they're not going to move out of here, we're going to see higher wages. Inflation is going to creep up, but I'm not that much of a hawk, and I don't think the Fed is either. We may see, I think we're looking right around 2%, 2.1% inflation rate at the present time, and maybe we get to uh, 3% inflation. That's not excessive by any means. Yeah, we're going to see it, and we're going to keep pushing these interest rates higher as a result of it, but not excessively.
Well, that kind of leads me into the next question and why we, are all here and everyone here is in the mortgage and real estate industry. What will, this, I mean, we've already had somewhat of an increase in interest rates and it's almost completely squashed refinances. Um, if this continues and we continue to have a steady increase in interest rates, will that squash the real estate market or is it going to put a big sort of damper on it in 2017, would you think?
Well, that's a tough one, of course, to answer emphatically. But on one hand, you're going to see home prices increase because of the, the ratcheting up of inflation. But unless wages go higher, it's going to continue to force more and more people out of the home buying market. Uh, so and we still have this hangover of very little inventory in the real estate market, in the residential real estate market. So I don't think it's going to hurt housing. It certainly may if we start to see wages increasing, and that is another one of these toss-ups that the markets have, I think, gotten a little ahead of themselves in the sense that there's a general belief in the markets themselves that inflation, our wages are going to start going up because we're at full employment. But the question obviously is how much they're going to go up, and I don't think they're going to go up as much as the markets are currently anticipating at this point. So the housing is still a toss-up in my opinion. I don't think it's going to get any worse other than the fact that refis are done.
Right.
But homeowners and the attendees here probably know it better than I do, but to get a mortgage now, we're probably going to see an awful lot more ARMs, 5-1 ARMs, 7-1 ARMs, to get that initial rate down to the point where people can continue to qualify for loans. The higher end markets, they'll do all right, but the middle income stuff, it's a question. I think it'll be okay, but it's not going to be a ball buster either way, strong or weak.
Right, right. Okay. Let me. By the way, if you have any questions, um, just put them in the chat box. We'll get to them for sure, and or at least we'll get to as many as we can. But one question is that we've been sort of talking about, hey, the economy is going to grow no matter what, and we've been talking. It's a very positive outlook, but there are some sort of things out there that are alarming. Russia, but specifically China. Um, you know, there's just more and more news about what feels like a potential trade war that could creep in. First of all, do you think that that's likely? And then secondly, if it is likely, or if it does happen, what kind of ramifications would it have on obviously the economy, real estate, mortgage rates, that kind of thing?
Well, first of all, of course, you need to define in detail, or we do, or anyone does, what a war means. There's definitely going to be a high level of tension between us and China in terms of the trade policies. I don't think of all of the things that Mr. Trump has talked about, that is number one on his hit parade, and has been through most of his campaign and so forth. These trade deals should be redone for the benefit of the United States, but a trade war, China can't stand it. They need us to keep buying their stuff. And if we're not buying it, then they've got real troubles. On the same side of the coin, we need China because they do produce a lot of things that we use in this country, from little gizmo widgets to electronics to TVs, all of those kinds of things. So we need them too. But again, when Mr. Trump gets, I come back to this a lot, but once he's in that White House, all this tweeting and all this stuff and all these one-liners that he has continually dished out over the course of the last 6 weeks or so, that all comes to an end. Now you're dealing with reality and politics, and China's going to be an issue for us, but I think we'll get through it. The North American free trade thing is probably a bigger thing to deal with, our trade deals with Mexico and Canada. But these are all going to have to be reworked, or at least that's what Mr. Trump wants to do, and probably should do. And but it can't end. It can end badly for everyone, and I think in the end, cooler heads will prevail, no matter what occurs or what comes of it. There's not going to be a trade war type thing going on. That would blow our inflation levels sky high, our interest rates back to the days of the late 80s, and won't even think about the early 80s. So I think we'll be all right. It'll roil the markets, but in the end, whatever renegotiations are finally accomplished, first of all, are going to take a long time. You just don't do this in a week or 6 weeks or even 6 months. These negotiations will, once they're started in earnest, will probably take close to a year to hammer out.
Well, I guess along the same vein, though, as far as international, also in the news consistently, and I don't know if you have really any major thoughts on this, but if you're going to throw it out there, if you do, which is Russia, same type of thing, not necessarily trade war, but our relationships with Russia and how that sort of instability could potentially affect the marketplace.
Well, that's certainly one of the big wild cards in the international political arena. It's obvious that Putin and Obama did not get along, and that we're going to have to open up some new chapters between us and Russia. I think it was a wise idea for him to elect this, or to appoint Tillerson from Exxon, to be the Secretary of State, because he knows how to deal with those folks. I'm not a geopolitical expert by any means, but it seems to me that what's good for Russia and it's good for the United States are the two things that have to match up together. And it really depends on Putin's attitude, and it just can't develop into anything overly serious. I mean, you know, for example, we just had the Ukraine and the Crimean thing going on here in the last couple of years, and that didn't really, you know, it got a lot of media, it got a lot of attention, but it didn't roil the markets too badly in the United States. It caused some problems in the Eurozone, but we'll just have to wait and see on that. I think that's a real wild card, and it really is going to be dependent upon how Trump gets along with Putin.
Right. Right. Well, I mean, that, by the way, keep the questions coming, guys. I'll get to them here in a minute. Um, what is, I guess, what is your biggest fear when you look at the economy, when you look at the positive nature, the stimulus that Trump is clearly wanting to put into the economy and will actually put in the economy, and all the rest of it. What is your biggest fear about what could derail what looks to be a really positive 2017 overall? Interest rates don't seem like they're going to go up too high, too fast. Everyone's talking about expansion or continued expansion. But what is it that you feel that could derail all of this for, you know, skyrocketing interest rates or, you know, halting of the economy? What likely unforeseen event?
My biggest concern right now, Jason, would be that, or is, that when Mr. Trump actually gets in that round office, he's going to find it being a very lonely place to be. And if he cannot bring himself to deal with the political aspects of the various plans and approaches and things that he wants to accomplish, it's just all going to stymie. It'll hurt the stock market. The wages won't go up. It'll just, you know, drag on and on and on if he doesn't learn how or accept the methods and slow down his pace and so forth. But if there's a split within his administration, which is possible, look at some of the people that he's brought aboard. These people aren't milquetoasts in the sense that they'll just sit by and do anything he wants to do. I mean, you got Wilbur Ross at Commerce. You got some serious generals that he's brought aboard. Of course, they all have generals. It doesn't matter what politics or who the president is, but there are people in his cabinet and his advisors that will sit still very long for his approach to how he's going to get these things accomplished. And to me, that's the biggest fear. And it only is a big fear in that it will crush the anticipation that's currently built up in not only here in the United States but around the world, that the U.S. is going to really get their act together after 8 years of kind of fumbling around, if you will. And if he fails at that, it'll have some serious market damage, which in turn will bring the consumer into a more negative attitude.
Okay. Here's a question from one of our attendees here. I'm trying to get. I don't know why it's not going there. Oh, here you go. This is from Matt. Some people are projecting another rally in bonds in 2017, which would take the 10 below 2%. How likely do you think that is? And why would that occur?
Well, I don't think it's very likely, but on the other hand, if it did occur, it would have to do with a complete disappointment in all of these things that the markets, including the bond market, are anticipating at this point in time. But to take it down 45 basis points which isn't really a big move. It would just take some sort of rethinking that inflation is not going to be as serious of a problem as the markets currently believe it will be. Not a problem, but you know, if the markets start thinking, well, inflation's not going to really hold over 2%, that's a plus for the bond market. If the stock market gets shaky, which is, in my view, going to happen here over the course of the next 3 or 4 months, I don't mean it's going to turn into a bear market necessarily, but I just think the market's well overcooked right now. That would be a support for money to flow back into the bond market on a more or less a safety parking lot. But to sustain rates down at that level, I don't think that's likely based on what we're seeing right now. Of course, a war or a huge terrorist attack, these things aren't even in the picture at this point in time, but they're certainly they haven't gone away by any means. Again, this goes back to, like, well, everything that we're talking about in regard to the Trump and whatever and everything that the markets are thinking about, all has to do with all this domestic stuff, lower taxes, trade, higher wages, cutting regulations. Those are all obviously domestic circumstances, but then you bring in this geopolitical thing, and that's a wild card, and who knows? You know, a terrorist attack in the United States will definitely drop the bond market yields. You know, depends on how much, where, and how bad the whole thing would be, but I don't think it's over. But absent those things, I don't see interest rates getting substantially lower. It's going to take a trigger of a major unanticipated event to cause what that gentleman is asking.
Yeah, well, sure. What about, this actually is a question that's sort of based on your commentary a lot, which is, and I won't have it up here on the screen, guys, so don't think that I kind of screwed up here, which is, you know, mortgage rates have recently very much followed oil. What are your thoughts on the price of oil in 2017, the direction, and will it continue to sort of go up?
Well, first, let me predicate it by saying I'm not an oil expert. I read the statistics and listen to the oil analysts, but there's more oil than there is a demand for it. Now, obviously that's a heavy statement to be made, but it's the truth. We've got more oil available to put on the market. When I say we, everybody in the oil world. The idea that we're going to get crude oil substantially higher, it's trading right now at about a little over $53 a barrel, maybe gets up to 60, but as soon as it gets up to whatever that equilibrium price level is, then the oil supplies are going to start to rise. And I don't believe OPEC can hold it together. They have never been able to do it. And even though they've done it now, I think that agreement was in November. Nobody's cheated yet that anybody knows about, but it will happen. Most of the OPEC countries need oil. That's their main source of revenue. And the higher the price, the better it is for them. But here we're sitting with shut down oil wells and stuff in terms of the fracking. And once the prices reach a certain level, the pumping is going to take off again. And I just don't think we're going to see a whole lot of increased oil prices. We've already pushed them up almost double from their lows. But what happens with oil also takes direct impact on the currency markets and on our stock market recently. You know, oil goes up, stock markets hold. oil takes a dive and the stock markets will back off. All oil and all gold in the markets is settled with U.S. dollars. So the stronger the dollar gets, the higher the oil prices, regardless of supply or demand. So it's an issue, but I don't think it's as big an issue as we should make out of it at this point.
Okay. I have a good question because it was brought up time and time again in the during the election, which is President-elect Trump's view on immigration, securing the border, all that kind of stuff. Um, what do you think immigration policies that he and Congress will implement, at least one would think, will have on the economy and mortgage rates and whatnot, this coming year and the year after?
Well, I'm not so sure that it has a great deal of impact on the wide swath of the economy. It does have an impact depending upon how it unfolds on the level of the workforce. If if we were to stop all even legal immigrations or slow it way down, we're going to take would-be workers away. And that, and again, would end up to be considered an inflationary problem. But immigration, now you're pushing a social issue. It isn't working in Europe at all, and that's one of the key reasons why the Brits decided to leave the EU, because they wanted to control immigration. Trump's got all of these ideas. I think they're probably decent ideas. Okay, we'll have immigration, but let's not let every crook and nutcase in the world come open door right in here in the United States. Now that's a policy that is not going to be accomplished in any reasonable time frame. They'll be debating this immigration thing for a couple of years, I would imagine.
Really? In terms of securing the border and that, I'm just talking about securing the border and taking steps to do so.
Yeah, the president has a lot of authority to clamp down on people coming into this country in terms of the various legal channels and law enforcement stuff. But at the same time, even though, like I said earlier here, everything we're hearing and everything we're reading right now since the election is all domestic stuff, and we have heard nothing, and it's deliberate, nothing from the left side or the Democrats, liberals or progressives, or however you want to define that sector of the political belief. And if depending on how we control the immigration inflow, will have a great deal of effect on how rapidly some policies can be put into effect. Mm-hmm. Now, how he uses executive orders, like Obama, my God, he governed with executive orders because he couldn't get anything done in Congress. Mm-hmm. There's going to be an awful lot of roiling if those things get too far out, but they need to be dealt with. There's no doubt about it. Now, if you get a terrorist attack, and it is so simple to do, for a handful of terrorists to blow up a bunch of malls, for example, that will light the light bulb about really clamping down on people coming into this country.
Right. I guess that'll leave me, and there are a lot of other questions, by the way. We're coming in on 30 minutes. I'm going to throw out one here because of it kind of dovetails well into what you were just talking about. But if you have questions and you want them answered that we didn't get to, just email me. My email address, well, actually, you have it. So just reply to the webinar invite. That'll come to me, which is webinars@tbwsmail.com. But you also can email me at lutz, L-U-T-Z, @tbwsmail.com. And I'll make sure that David gets those, and hopefully, David, you can answer those in the event.
I'd be happy to.
Great.
Yes.
All right, one other question, because we were talking about all the things that the market is currently focusing in on, because that's where all the noise is, which has to do with domestic affairs, and what Trump is likely able to do, President-elect Trump is likely to able to do in the next 6 months, year. But are there any? Is there? Do you look at anything sort of unconventional? Some of these are somewhat conventional, but that maybe isn't completely intuitive in terms of prognosticating interest rates technically, fundamentally, and other marketplaces that you find correlate, or maybe more importantly, are a precursor to rising interest rates?
Well, generally speaking, no, but specifically, as your screen shows here, you got to watch commodities and the currency market. But mainly, it still goes back to the basics. What kind of GDP growth we have, what kind of inflation that we're looking at, or that we meaning the market's anticipating. There's not really other than maybe the black swan events that could occur, a war, a terrorist attack, political tensions building. These are the kind of things that you can't anticipate. But you keep an eye on commodities. Although all you have to do is watch crude, because whatever crude oil is doing, it more likely it affects every other commodity, whether it's be copper or tin or zinc or any of the other basic commodities. And that's pretty much what you need to do is just kind of pay attention to what we're saying. Not that I'm the genius of the world, but I think I cover pretty much what I think. But equally important as to what's going on in the markets and why they're acting certain ways.
Sure. Yeah. Oh, that last question. There's a lot of others out there, but this one actually, I think, is a great question. We haven't heard a lot about it. Hopefully, you can just spend a minute or two on this, which is, do you think the fact that baby boomers are moving into retirement, spending less money, and all that kind of stuff, will further, because we're already sort of seeing it, but will further counteract inflation, higher interest rates, and that kind of thing, as just being this continuous weight on the marketplace?
Well, that is an extremely good question. There's no doubt about it, and it's not getting a lot of outward attention in terms of the media and the financial press and so forth. But this massive moving of baby boomers from the workforce into the retirement period of their lives is a huge demographic shift, and over and above the question here, and I'll get back to that, is going to have a hell of an impact on our economy over the course of the next 10 or 15 years, as the workforce behind these baby boomers isn't big enough, strong enough economically to keep pushing all of these programs. So that, getting back to the answer to the question, I don't think it's going to lower inflation. It may have an impact of just the opposite, because the cost of Medicare, the cost of Medicaid, these things are going to escalate dramatically, and healthcare. So they won't spend a lot of money, and in that context, yeah, but it won't totally keep rates lower. But what it will do is takes away the kind of push that the baby boomers had, going back to, I think, the first year of the boomers was 47, through about 65, and through that time frame, the massive number of births that eventually move through the workforce. We're not going to have that anymore, nor are we going to have high-paying jobs like the baby boomers had with the advance of technology. So it it'll I don't think it'll counter inflation, but it will keep it from increasing to the magnitude that it would otherwise. But inflation's still going to go up. We need it. We actually need inflation, not runaway,
Sure,
of course.
sure, sure.
Not
Okay.
like we saw in the late 70s.
No, no, no one wants that. I guess we'll end on this mainly because we're recording it and we will be able to hold you to this number 12 months from now. And I know you're going to nail it. I know
I'm
you're going to
okay.
nail it. So, how
I'll
high do you think this time, 2018, last week, and this year, will interest rates get to?
mortgage rates or treasury rates.
Both.
Well, I don't think you're going to see this year mortgage rates get above 5.5% on straight 30-year fixed.
Okay.
I don't think the 10-year note yield is going to get much higher than about 3 to 3.25%, and we're now at 2.45.
Got it. Got it. All right. Well,
That's
good. Well, this is what we'll
well,
do is we'll take over/under bets from everyone. The CEO of RateAlert, LO SocialBot, and Buyers App will be taking those bets and funding those. So no problem there. Um, all right. Well, David.
remind me what I said about a week from now. Now, I really don't think mortgage rates on 30-year fixed are going to get too high because I don't believe that inflation is going to get as much of a grip on the economy in 2017 as what some and many are currently expecting.
Got it.
It's going to go up, but not not
Significantly.
dramatically. And wait until something happens with the Trump administration, and it will. What it is, how it'll come by, I don't know, but it'll rattle the bones of a lot of people. So I'd say 5.5. You're looking at 4.5 right now on a 30-year fixed. About, isn't that right?
Yep. Yeah. Well, four and a
Yeah.
half, 4 and 5/8, somewhere in there. Yeah.
Yeah. So 5.5, 5.6. That should do it.
Yeah, that would be the cap. All right. Well, we already have a few bets, $1,000 here, so there we go. Wow, that's
Yeah,
gonna be
I
exciting.
I'll cover everything up to 10K.
All right, very good. All right, well, David, as always, it's you've been very informative. It's always great to hear your perspective. And by the way, for those of you who are not Rate Alert members that are on today's webinar, you can get David Schurmeyer's along with Brian McNee's daily commentary. It's actually twice daily commentary on Rate Alert. It's good stuff and the kind of information that, quite frankly, that professional loan officers really need. Not only to stay sort of on top of the direction of rates and why, but just to put a little bit more meat on the bone when you're talking to clients about what interest rates are today, right? And you can say not only what they are, but why, and what are the things in the future that could move interest rates up or down. So it sort of sets you apart from everyone else that just says, "Hey, today's rates is 4 3/8 or 4.5 or whatever it is," and you can actually tell them why and what you're looking at in the days and weeks and months to come. So if you haven't already, go to ratealert.com, check it out. It's $1 for 30 days. Again, David, thank you. And actually, before you guys jump off, and I want to warn you real quick, I want to talk to you about, because this will be an advertisement, um, I want to talk to you about LO SocialBot. And for those of you that already are LO SocialBot members, or you kind of know about what it is, and you've been through one of my webinars about what it does, um, then you can jump off. But for those of you that want to get deals from social media and you want to provide quality content to your friends and followers on all of your social media platform, and you can see, well, you'll see here in a second how it is that it can help you build your business, how to get referrals, how to be there at the magic moment when someone is ready to buy, or I guess technically refi. Just stick around for 10 minutes. I want to show you exactly what it is, how it works, and how you can get deals from social media, frankly, without selling at all. So, David, if you want, go ahead and jump off. Again, thank you so much for your time.
I really have no problem. I enjoyed doing it, and I echo what you say. If anybody's got any questions or wants to enter into a discussion, just feed me the emails. And because, you know, everybody's got an opinion, and sometimes we all learn by different people's
Absolutely.
points of
I,
view.
I can actually, I'm getting them on my phone already, so perfect. I will shoot those over to you, David, and thank you for taking the time to, well, thank you in advance for taking the time to do that as well. It's been great.
All
Thanks.
right, my pleasure, guys, and Happy New Year to everybody.
All right, thanks, David. Um,
Mm.
first of all, everyone, before I jump into exactly what LO SocialBot is, normally what happens when I go over this very brief presentation is people are like, "Wow, yeah, that makes sense. I want to get it. I want to try it out for $1 for 30 days." Like the same system we have with all of our other products. And then they go in and they jump and they try LO SocialBot and they don't get the discount code. Just want to give it to you in advance before you even know a whole hell of a lot about it. The discount code is Facebook, okay? And you put that in at the end, right? When you go and check out, right when you put in the credit card information. There's like two steps, then you put in the credit card information, you put in Facebook, and you get 20% off forever. Just want to make sure because it's a huge giant pain when we have to go back and do, 20, 30, 50 people that have gone ahead of time and done it. All right. So, this is the deal. We have a system, LO Social Bot, that basically does everything that you should be doing on Facebook and frankly all of your other social media for you, right? You set it up once, takes 6, maybe 7 minutes. In fact, I'll show you how to set it up. And then after that, the system does it for you. So you can engage with your friends and followers in a cool way that doesn't involve like selling yourself, right? Because you can only do that so much on social media without feeling sort of weird and pathetic. So this is sort of the rationale, or a little bit of math, I guess, that goes behind why it is LO SocialBot is so effective for loan officers across the country. We've had LO SocialBot up and going for about 6 months now, and it has been a complete whirlwind because it is the only product that solves this specific problem. So, on average, about, people have in general, not just loan officers, they have about 300 Facebook friends. And we're just going to talk about Facebook. Forget about your LinkedIn, your Google Plus. It's just that's important, but just for the sake of simplicity and what it is our system does for you, we'll just talk about Facebook. If you have 300 friends on Facebook, 10% of those people will move per year. That's 30 potential deals per year. Okay? Now, LO SocialBot is not going to get you every single one of those deals. Clearly, that would be really cool if it did, but there's no system that would do that. But there is one key thing that if you've had trouble getting deals on Facebook, right, that you've run into, and we've all run into this, not only with Facebook, I guess with all marketing. And the key is to be in front of your prospect at the magic moment, right? The moment when they decide to purchase a home or refinance their home, or when one of your real estate agents is just had enough with their current realtor or with their current loan officer, right? A deal has gone south. If you're in front of them at that moment, right, that would be fantastic. Like if you were just sitting at their desk and things were going to hell in a handbasket with a deal, 90% of the battle would just being in front of them. Well, that is what Facebook is, right? Meaning Facebook is where people's faces are a great majority of the time. And if we can be in front of them on Facebook on a regular basis providing quality content, we've kind of won. Look at this. 1 in 5 page views in the United States occurs on Facebook. Average time spent on Facebook is 20 minutes. So clearly, I guess if you're going to market, and I know all of you do market and market successfully, you need, Facebook would be a prime time place to be, right? Because people are there. Especially if you have, it's far better than a website, right? Because people are on Facebook more often. So the question becomes, I've said this sort of several times, the key is to be in front of them at the magic moment. But you certainly can't sit there and say, hey, my name is Jason Lutz. Well, that wouldn't make any sense. My name is your name. And if you need to buy or refi, I'm your guy. right? You can only say that on Facebook or any other type of marketing for that matter so many times before you look sad and pathetic. And that's a lot of the reason why a lot of the loan officers that I talk to don't market on Facebook regularly because they're just not comfortable with soliciting their friends, their family members, or at least on a regular basis in any way, shape, or form, let alone Facebook. So the way you can do that, and the way we help people do that across the country is through content marketing. And content marketing is the way in which you can be in front of people, whether it's Facebook, email marketing, or any other marketing, on a regular basis, right? In a cool way that engenders credibility so that you can be there at the magic moment. Here's a little saying. Content creates trust, and this has always been true, and trust is the filter through which all business success must pass. All right, this is what I want to do. I want to actually jump ahead here because I know you guys have been on for a long time, and thank you for so many of you sticking around, well over half. The key, though, real quickly, to the content that LO SocialBot auto posts onto your social media based on the schedule that you want is three things. First of all of our content is extremely timely, meaning we take what our bond analysts, along with other writers that we have, and it's content and it's information that is happening right here, right now in the marketplace. And the reason why that's so important is because that's what social media is. It's about what's happening right now. And with ours, it's about the direction of rates and why. What's affecting the real estate market? We always sort of put a positive spin on it, of course. We don't want to say, oh, all hell's breaking loose. If you buy a house, you're completely nuts because we don't know what. In today's marketplace, it's pretty easy because the real estate market is so good and interest rates are so low. But what we do is we take content that people who would be interested in buying a home or that have a home and that they just want to know what's going on in the marketplace. It's relevant, right? Meaning the content engenders credibility over time, which that's important, right? Because some of your friends and followers, they may know you're a loan officer at one time, but they kind of forget because you don't stay in contact all the time. If you have 3 or 4 or 500 friends on Facebook, you aren't talking to everyone all the time and letting them know what's going on in your life and new careers and all that kind of stuff. So it's relevant. It has to do with the market, and it's interesting. So let me do this real quick. Let me show you what our content looks like, or at least a couple of our pieces, and then I'm going to jump into how it is that you schedule it for all the different marketing pieces that you can have. And by the way, it's just $1 for 30 days. So this is an example. This is a Facebook timeline, right? Meaning this would come across someone's Facebook timeline. And it's just a daily mortgage market overview, which is one of the pieces that you can select from to have automatically posted onto your social media. And then what happens is they click on this saying, oh, wow, U.S. factory versus beat estimates. And it jumps over. This is the web page that's branded to you. Good quality information, right? A brief overview of what's happening in the marketplace, all branded to you. Because the worst thing that you can do in social media marketing, and I don't want to get too in depth on this, which is, and I see this quite frequently, is loan officers posting an article to a complete third-party website, CNBC, CNN, Fox, whatever it is, about what's going on in real estate mortgages. That's a bad idea because, God forbid, whoever it is that's reading the article is actually at that magic moment, right? They're ready to buy a home or whatever the issue may be. And they're sort of thinking about, this is time for me to buy a home or refinance, because all you've done is you pushed them over to a third-party website that has ads all over the place. If they're actually looking for a home, it's going to be home buying ads, right? From other websites and mortgage companies and that kind of thing, right? So this is branded to you so it sticks on your branded page. Here's another example real quick. Not only do we do truly credible stuff and really meaty kind of things like this that engender credibility and show that you know what you're doing, but we also do fun stuff, right? We do things that just get clicks and people are interested in, like Bob Hope's mid-century mansion half off. So this is one of those posts that I'm not sure it really engenders credibility, but it's fun and people click on it. This is called our interesting real estate news and home tips. Okay. In fact, let me do this real quick. And by the way, one question somebody asked is, can you do this for both your business and your personal Facebook pages? The answer is yes. You can do it for your business and personal on Facebook. You have LinkedIn, Twitter, Google+, Pinterest, um, all of them. But you can also do it on several pages of your Facebook. All right, so when you first log in here into your LO SocialBot, this is the page you're going to see, which all you're looking at is the different types of posts that you can have auto-posted each and every day, good quality, solid stuff, and the social media account that you want to go ahead and have it posted to. So let me give you an example. I kind of already showed you what a mortgage market overview looks like. Let me show you an in-depth market analysis, right? And it's this, right? It's meaty stuff, branded to you, your company name, your imagery, all that kind of stuff. This type of piece is perfect for those of you that have LinkedIn, first of all, and you can post it to your LinkedIn because that's more of a professional network, the kind of place where you're going to have your financial planners, your tax accountants, your real estate agents, your builders, all that kind of stuff, right? So this is perfect for that audience because it's in depth, gives a little historical perspective, that kind of thing. This is a piece that you get to choose from. You get credibility booster. This is kind of talks about maybe some scams that are going on, right? It's a consumer advocacy piece where you'll be helping to protect your friends and followers from getting duped in some sort of real estate deal, right? And the moral of the story is always, if you have any questions, call me or contact a licensed real estate agent, and we'll get you all set straight. Mortgage market overview, in-depth market analysis on a weekly basis as well. That's sort of what's going on for the week that could positively or negatively impact mortgage rates, real estate. Again, positive spin. One thing we don't do, by the way, and that we were sort of talking about here on the webinar, we never talk about actual interest rates. Only the direction of rates and why, right? We never say, wow, 30-year fix went from an average of 4 3/8 to 4 5/8 in a couple of days. We never remotely close to do that. We just talk about what's going on in real estate, what's going on in mortgages, okay? And so it's really that simple. And by the way, to set this up, and again, once you click on these different dates, right, and you can have Facebook Fun, All Business, or you can just go in here and select them yourself. Once you've done that, you're done forever. It will automatically post to all of your social media accounts. And to set this up literally takes 6, maybe 10 minutes at the most. Let me show you how it works. First, you edit your marketing profile. It's like every other marketing profile you filled out in your entire life, right? It's just compliance verbiage, about me, basic contact information. Then you add your social networks, right? And all you got to do is you just click connect, you're done. Okay? It's really that simple. And you're completely done setting it up and you don't have to touch it anymore. In fact, let me show you just real quick so you can get even a better idea. First of all, people love it. In fact, you can see some of the testimonials on our Facebook page or so, 5 stars. Everyone it's just a huge time saver. So this is what it looks like on your Facebook page, right? This is obviously your name, your picture. This is just our Facebook page. But it's all completely branded to you. And when they click on it, again, it goes to your page, right? And all this happens automatically. Let me show you how to go ahead and try it for $1 for 30 days, and let me show you what the cost is because you're going to be shocked. So you just go to losocialbot.com. In fact, let me go ahead and put that in the chat real quick for you guys. And then you can create an account here, but I'm actually going to go all the way at the bottom so you can actually see how affordable it is. Here's some more testimonials. Everyone. I think we're at 89% of the people that try it for $1 for 30 days end up continuing with the membership, which is the industry average of trials with $1 up front is 40%. So we absolutely kill it. All right, so create account, right? You just, again, none of this is very difficult. It takes no time at all. Set up my account, pick the membership. We're just going to go 12 months. And what you'll see here is that it equates to $29 a month. You pay after the 30 days, $348 on the 34th day for the year, except for you get the discount, right? So you get an additional discount over and beyond. You just click Facebook here, and you can see it goes all the way down to $276 per year. It's 20% off, but you only pay $1 today for 30 days. So you can try it out and make sure it is everything I say it is. Put in your credit card information, you're done, right? And then it'll take you to the schedule. It'll automatically log you in, and then you just go to this page, edit marketing profile. You're done. Okay, that's all there is to it. So do me a favor, just try it for $1. Really, I mean, you're gonna love it. Everyone does. Let me answer a couple questions here that have come up. Oh, by the way, if your company doesn't allow for social media, or you're like, oh my, I don't know, they're so uptight about all the marketing, I can't imagine that they're gonna allow for this. All you do is just go to here, love to, but my company doesn't allow me to post on social media, and fill out this brief page. This video tells you a little bit about our corporate edition, which will completely assuage any of your company's fears about this marketing, and quite frankly, will solve so many of their social media marketing issues. They always do it. They just love it. So just fill out this information, fill out what you can. If you don't know the number of originators, that's okay too. And send that over to us, and we'll get in contact with you so we can do a presentation. All right, we had a couple questions. Oh, if you select contact with FB, we'll ask you. Yes, yeah, Jonathan. So when you click connect, in fact, let me see if it works with the way I'm logged in. I can kind of show you. But when you click this, it'll have a little drop down. See, these are all of our social media pages. Yours will say, okay, your profile, meaning your personal page, or LO SocialBot, or well, not LO SocialBot, but you know what I mean, your business page. Okay. Instagram, we don't do Instagram. It's not just us. Instagram does not allow for APIs. They don't have an auto posting API. We have, well, you see the ones that we have. Those are the 5 that we do. And quite frankly, with our members, and that's obviously not the case with you, John, is that usually people do Facebook, maybe LinkedIn, and then a few people do Twitter. Facebook is the big one. Yes, sorry, I forget this every single time. Thanks, GP. One fee. Doesn't matter if you select all of these social media, you select one. It doesn't matter if you schedule for every single one of these to go out, which I don't suggest, or you schedule 2 or 3. It is just one low fee. You can change. Sorry guys, I'm kind of going all over the place. There's a lot of questions coming in fast and furious, so I just want to knock them out so that if you're like ready to go to losocialbot.com and buy, or try it out for 30 days. You can change just like all of our other products, because we have RateAlert, which you guys may not know of, Buyer's App, LO SocialBot. You can change at any time the term. So you can start off saying, listen, you know what, I'm just going to do 30 days at a time, and that's it. And that's fine. We're happy with that for sure. But if you're like, hey, I can now afford a full year and I want to take advantage of as much discount as I can, absolutely you can change it at any time during the course of your membership. And you can go the other way. You can go from yearly and you can ratchet it back down to 6 months or whatever. All right. Well, let's see. What else? Any other questions? Oh, I just did something weird here. Sorry, guys. All right. No, I think we're good. You guys, I think that's pretty much all the questions. Just go to LO SocialBot. And if you have any questions, just give us a call. It's at the bottom of all of our pages throughout. We want to make sure that you understand everything perfectly. And when you do get it for $1 for 30 days, set up your account, um, your profile and connect and do all that. But also, we're going to give you a call. One of our member representatives is going to give you a call. Make sure you understand everything perfectly. Make sure you schedule everything the way you really want it, and also give you sort of best practices along the way if you want, right? And of course, if you want to get it done right away, just give us a call at that phone number down there below. Um, oh, sorry, contact me section. Yes, it's got the contact me on this page right here. That goes to that goes just directly to your email. So whatever the email you have on, the way you sign up is the email in which this goes to. Okay. Wow, a lot of questions. Great, guys. This is fun stuff. What time of day does this stuff go out? It's sort of throughout the day, but mostly in the morning, because I think I mentioned this before. This information is very timely, meaning it's about what, especially our daily commentary, both the brief analysis, which is great for your Facebook because it's picture oriented. It's just good on a phone, by the way, as well. Well, they're all good on the phone, but it's just particularly skimmable. But this is information about what's going to happen during the course of the day that could positively or negatively impact mortgage rates. And so the reason why most of them go out in the morning, and when I say morning, I mean anywhere from about 8 or maybe 7:30 Pacific to about 9:30 Pacific, in that window, right? Is because it's about what's happening during the course of the day. I mean, if we had, hey, the big market moving event is the Fed, and they're going to have a meeting, and maybe they'll increase rates, and if they do, this is what's going to happen in mortgage rates. And if we posted at the end of the day and it already happened, you'd look foolish, right? The other thing is, though, is that we do have interesting real estate news and home tips and that kind of thing. And a couple of our other pieces like Credibility Booster, those are less time sensitive. It's about what's happening here and now, because we do a lot of like celebrity homes for sale or listed, and home tips as well. But it's not quite as timely, right? It's just about what's happening today, but not what's going to happen over the course of the day. Those will go out late morning to early afternoon. Okay, so we'd like to spread them throughout the day as well. Yes, you can have it for your branch. People do it all the time. So obviously this is first name, last name, right? Right here. You can just put your branch's name, right? People, these are just fields. You can make those fields be whatever it is you want to be. And by the way, for those of you, I hate to be that guy who says, hey, you should get it right now because, prices are going up. That's pretty annoying. But I just want to share with you what this page right here is going to look like in the next couple, 3 weeks. Let me see if I can find it. If you give me a minute, I'm going to show you something that I think you're going to love, because what we've done with this page is we've made it a true sort of blog page where not only will they see this post right here, they're going to be able to see past posts. So it's a real sort of deep web page that I think you'll find impressive. So this right here is just a demo page. Like, this content is sort of fake. Some of it's sort of real, but most of it's like fake. But what you see here is that, wow, they're going to a page that is, deep. It's like a regular blog page, right? So when they click on it, let's say they clicked on a blog post, they come here, but on the right-hand side, they have some past posts. And all of these posts, go back to this page. You have your information here. You have your About Me. You can share it, right? Or they can share it. And it looks gorgeous on a phone. So not only will they have this post, the depth of it will be pretty great as well. But when we do release this, because quite frankly, this acts as a web page, except for, unlike most people's website, it has a lot of deep, timely, relevant content. prices could go up because this is such a huge enhancement. So I just want to let you know, not to be the, hey, buy now before prices go up, but just to let you know what's on the horizon. But by the way, if you get it now, your pricing doesn't go up. It's just after. We never switch pricing on our current members. All right. Chuck, yes. Okay. The question is do we track clicks? And the answer is yes. We're tracking clicks now. Um, for our corporate clients, what we do is we have what's called social reach, where they're able to see, well, just that, how many times people have clicked on their posts for their loan officers. We just launched that maybe a week ago, or maybe, yeah, about a week ago. We're adding that same functionality to the loan officer's admin portal as well. So what will happen is, just to be clear, you'll have a page that's right here that says social reach. You click on it and you'll be able to see how often people have clicked on the articles on Facebook, LinkedIn, all the other ones. So sort of a two-sided answer. If you're a corporate client, yes, meaning you have all kinds of other stuff associated with it in addition to social reach, but individual loan officer members will also get that. Yes, absolutely. John, you can add it to your email signatures. That page you can add for sure. Oh, by the way, yeah, thank you for getting it for a year. The pricing is not going to go up for you at all. Just by the way, someone here on one of our members here is watching the presentation, worried that pricing might go up in 2017 because they were a member last year, and we thank you for that. And they love it, but we're not going to increase pricing for you, even when it renews. So we're not increasing it. We just increase it for new members that didn't get in on it before some of these enhancements. All right, very good, guys. Thank you. If you have any other questions, again, and thank you, Glenn, just reach out to me. Most of you have my email address, but just to remind you, it's lutz@tbws mail. Here's the, don't forget this, please. Otherwise, it just, not that you won't get it, but it just creates work. Facebook for your 20% off forever. And if you have any questions, just shoot me an email there, or you can call my direct line as well. If I didn't answer any of your questions from this presentation, of course, with David, you can email me as well if you have questions for him. I'll make sure I kind of put them all together and shoot them over to him. All right, guys, thank you so much for staying on. I can't believe so many of you stayed on. I really appreciate the time, and have a great rest of the day and week.